Sarat Sethi is managing partner and fund manager at Douglas C. Lane and Associates. We've got him all hour. We'll talk markets, stock picks, AI, OpenAI, and NVIDIA. Also meet one of America's top financial advisors. Sarat, welcome.
Thank you.
Okay, we're going to get to all that stuff we just laid out.
Yep.
But let me ask you about the Federal Reserve, your take on what you just heard for the minutes.
Look, I think Steve is spot on. They're in a quandary, right? We don't have any data, and the data that leads to information. So really what they're playing with is pretty much the information we all have. I think what they're also going to look forward to is, look, earnings seasons is starting in a week or so. I mean, you got Delta starting Thursday, but financials coming after that.
Don't you love Delta?
I do. Who doesn't love Delta?
There you go.
Delta is a great airline, but what they're going to talk about is pricing, right? What are all these companies going to talk about? Where are they making money? Is it pricing? Are they taking price? Is it margins? Are they cutting? Where is the growth? And I think that's going to be telling for inflation expectations, because as we've known, the average consumer's inflation expectations are pretty high, and that kind of drives inflation. So we need to have that come down for the Fed to actually say we are going to cut more rates than people expect.
Or does the Federal Reserve need to kill that 2% inflation target because that target seems so dated given the post-COVID world, and just focus on jobs?
I completely agree with you, because the 2% was set in 2010 to 2012.
When there was effectively no inflation.
Well, you also had huge globalization, right? I mean, we were trading with every partner, and there were no tariffs, and you had immigration coming in, so you had input costs going down. Right now, you have all those going the other way. So, let's see where 2% maybe is not relevant for today's world.
So what would you like? What do you want to see the Fed do? Maybe, or I should ask it this way, for the stock market, what's the best thing the Fed could do?
Well, it's the long-term rate, right? It's the value that you put in your models for DCF. It's the value that people pay for their mortgages, what companies are borrowing at. The lower that rate, and that also then helps the budget deficit. So it's that 10, 15, 30-year rates that need to come down, not your short-term, what's money market going to do in 3 to 6 months. If that starts coming down, then I think you get another leg up to this market.
Isn't it entirely possible, Sarat, that the Federal Reserve can cut rates again and borrowing costs stay the same or even go up, which I know sounds weird to a lot of viewers and listeners, but the reality is the bond market is going to do what it sees as the best course.
100%, because the Fed doesn't control the long term. So it really has to be, is the Fed cutting rates for the right reason? And if it's leading for inflationary pressure, the bond market will act and the rates will go up in the long term. And that will not be good for the stock market. Yeah. It will not be good for the dollar. It won't be good for the deficits. It won't be good for companies and for individuals and companies.
The Red Sox used to, Manny Ramirez, that's just Manny being Manny. It's like, that's the bond market doing bond. That's the bond market.
Bond
being
vigilantes
the bond market.
might come out if rates get cut too low, if for the wrong reason.
The Fed is, to Steve's point, in a quandary. All right, your other big story today and yesterday and the day before that and the day before that was NVIDIA. And CEO Jensen Huang was on Squawk Box this morning for a long, wide-ranging interview. And Becky asked him about their strategic partnership that enables OpenAI to try to deploy sometime in the future about 10 gigawatts of AI data centers using NVIDIA systems, specifically how OpenAI, plans to pay for it all. Here's what Jensen Huang said.
They don't have the money yet. Yeah. And the way that it's going to happen, for every gigawatt of AI factories, you're probably going to need about $50 to $60 billion for the land-powered shell and all the computing and networking and all that, everything that goes along with that. And they're going to have to raise that money through, first of all, the revenues, which is growing exponentially, equity or debt.
Sarat, you own NVIDIA. I do. Obviously a big fan of Jensen Huang, but yet he just said OpenAI doesn't have the money.
Right. I mean, you've got all the words that we're talking about: vendor financing, circularity. How is this a catch-22? Essentially, you have companies that you're giving money to that don't have the revenues, that need to go borrow to get the revenues. So it's a very fine line. And look, I mean, he's got great products and he's got a great business. But I think we have to manage expectations, because all this is not going to happen, in the near future. It's going to take time.
My wife worked in consumer products for 25 plus years. Vendor financing is not new. It's not illegal. There's nothing wrong with it. It happens all the time in the retail world. You pay me, I'll ship you stuff, and then I'll pay you back. Do you worry, though, that this is so priced to perfection that nobody's doubting the plan?
Right. It is just
right. But what if the plan, as the A-team guy said, doesn't come together?
And that's the fear, because it could bring a lot of things down. So the idea there is, yes, you can be exposed to it, but don't be overexposed to it. Don't make this the home run. This could be part of a diversified portfolio, and we absolutely agree, but you need to actually make sure that you have other things that could work if this doesn't work.